Over the last few days, one of my favorite indicators in the stock market that I've been using for the last 5 years straight finally started flashing, letting me know that it was time to start doing some buying in my stock market portfolio. And so in today's video, I'm going to go over that indicator, what it is and how it works, what it's saying about the market right now, and what moves I'm making as a result of it going off. So we have a good bit to get into today, so let's not waste any more time at all, and let's get straight into it. So today we are going to be talking about the indicator named the Bollinger Bands. Now, this is a technical analysis based indicator, and I know some of you don't particularly like technical analysis, and I don't do it a ton here on the channel. But one thing I do like to remind people is that whether you like TA or not, at the end of the day, technical analysis is just the study of data. And the more data that you have about the market that you can study, the better off you're going to be. So whether you like it or not, it can provide you with an advantage over other people. I think it's pretty cut and dry, quite simple. And so again, although I don't do it a ton here on the channel, I do think it's extremely, extremely important to pay attention to as an investor if you're someone who wants to be a little bit more active within your portfolio, right? And so again, today we're going to be looking at a technical analysis-based indicator called the Bollinger Bands. Now, I'm not going to get super deep into how they work exactly, but I will give you a baseline overview. So back in the 80s, there was a guy named John Bollinger, and he was doing some studying of charts and realized that when you're looking at an asset price, let's say this is an asset price right here, right? And it's going up and down and up and down. Realistically, no matter how high it goes or how low it goes, it will almost always revert back to its moving average. So let's call it the 20 simple moving average, which is just the average of the total price from the last 20 days. And he was like, it's crazy, right? Like every time we go up, we come back down to this line. When we go down, we go back up to this line and up and down to this line. And it happens over and over and over again. And then he was like, wait, what if I could measure or like predict how high it would go or how low it would go before coming back down to this moving average? That would give me the ability to then say, oh, this asset is too high or this asset is too low, and it's likely going to go back towards that moving average. That would be crazy. And so he went on for a couple years trying to figure out if there was a way to do it. And he came to the realization that if you took the moving average price and you did two standard deviations, which I'm not going to explain how that works, just know it's a thing, two standard deviations up and two standard deviations down, that would actually kind of be the highest and the lowest that an asset's price could go from that 20 simple moving average healthily before going back down to it. And it was like a mind-blowing moment. And this guy kind of freaked out. He started doing seminars everywhere. He started publishing blogs. Like it was, or not blogs at the time. It was kind of like, publishings and stuff like that. But he was freaking out because I was like, oh my God, like this is one of the best things that's ever happened. He teamed up with a bunch of other analysts. It was like a whole thing. And whenever this was published, people started using it because the truth is that it worked really well. It gave you three very easy levels to read: the highs, the lows, and the neutral. When you're in the top side, you're too high. When you're in the bottom side, you're too low. And when you're at that moving average, you're about neutral, right? And if we apply that to what a modern day chart looks like, it looks like this, and it actually works extremely well. So what we're looking at right now is the 1 week chart on the S&P 500, okay? And we're looking at the Bollinger Bands. The red side is, well, obviously too high. The green side is, well, too low. And this blue line right here is the 20 simple moving average. And combined, these create what's called the Bollinger Band envelope. So when you're using the Bollinger Band envelope, the verbiage you would use is you would say, okay, we're currently around the 20 SMA, which is the 20 simple moving average when you're at the blue line, or you're in the neutral zone. If you push too high and you start getting very close or touching this red line, that's being overextended into the top side of the Bollinger Band envelope. And if you push into the bottom side, this green zone, you're overextending into the bottom side of the Bollinger Band envelope, right? And that's all you really need to know. Now, there is more to it, right? There is a volatility measurement in here as well, which will measure the overall volatility, and you can use the Bollinger Bands width. And there's a whole bunch of stuff that I'll go over in a future video one day. You don't need to know that. What you do need to know, though, is that when you're in this red line, you're too high, and you're very likely to start seeing a slowdown or a pullback soon. When you're in this green zone, you're too low, and you're very likely to see some sort of bounce or some sort of more macro reversal starting to happen sometime soon. When you're back at the blue line, you're likely either running into support or running into resistance. Very simple, okay? Technical analysis doesn't have to be complicated. Very simple. And what we can see when we look at the Bollinger Bands right now for the S&P 500, we have now officially hit the bottom side of the Bollinger Bands for the very first time since, lo and behold, way back here, in March of 2025, when we pushed into the bottom side of this Bollinger Band envelope during the tariff situation. And look what happened. We had Trump come out and announce massive tariffs that were going to be impacting everyone globally, basically, and the market freaked out. It absolutely crashed, and you saw the S&P 500 dive deep into the bottom side of this Bollinger Band envelope. And that was a signal like, hey, we might be getting a little bit too low here, could be looking for a reversal. Now, it took some time, don't get me wrong. I mean, we were in here for about 2 months before it actually transpired into growth. But from there, we then saw the S&P 500 bottom to top around 44% over the course of a year, which is absolutely insane. The time before that we saw this happen was back here. We hit the bottom side of the Bollinger Band envelope right here back in September and October of 2023, right before we saw the market absolutely rally. The time before that was right back here, right before this pump. The time before that was back here before this pump. I think you're starting to get the point. Historically, when we see the S&P 500 hit this green line, we're starting to enter into a period of accumulation. And I want you to pay very close attention to the way in which I am wording that. I am not saying this is the best buying opportunity. I'm not saying that this is the bottom. I'm saying we are entering into a period of buying opportunity, because the truth is that you can sit in this for a while. So let's go back and let's look at history. And I want to point out what happened right here in 2022, because although the S&P 500 hit the bottom side of the Bollinger Bands right here and got a little bit of a rally, don't get me wrong, a nice little rally there, we ended up proceeding downwards for a while, guys. We saw it go from January to October of 2022. So this does not mean that the bottom is in right now. It just means you're entering into a period of buying opportunity. Because the truth is that once we finally started to see these bottoms being hit, these were some of the best times that you could be buying. These were some of the best times. This was one of the best times. This was one of the best times. Dare I say, we could be entering into a period in which this could be one of the best times. And true, maybe the S&P 500 does this, and it continues to push further and further into the bottom side of this Bollinger Band envelope. It doesn't change the fact that when we look back at this moment in history, this will very likely have been one of those moments where we were entering into a great buying opportunity, just like this. Just like when we hit it right here, but then we continue to fall. It doesn't change the fact that this would have still been a great time to purchase when you look at it from, hindsight, right? And so when I see this is a great sign to me. And I'm like, you know what? I've been doing some profit taking. I've been stacking up some cash. I've been leaving some capital on the side of my portfolio, not going all in, just letting some capital sit for the moment that I thought, okay, I think we're entering into finally entering into a buying period. And this is one of those first major indicators to me that says, you know what? I think that's the case. And it is annoying. I'm not going to lie. I noticed this. I've been watching this for the last few weeks, wondering and waiting when we would hit the bottom side. And I thought I would have an opportunity to buy live in this video. And then, of course, the market hits this Bollinger Band and bounces straight upwards 1%. So, it's like, dang it, I should have bought yesterday or whenever I had the opportunity to, whenever we close at these lower levels. But the point remains the same. We are now towards the bottom side of this Bollinger Band envelope, which is historically a time in which it would be a decent time to start buying. And so, because of that, my plan is pretty simple. When we get these opportunities, maybe when the market's pulling back, when we're seeing VOO pulling into the $600 range, the $605 range, if it rolls over, anything like that, I'm going to be accumulating. Not only VOO, but I'm also going to be accumulating my isolated positions, my Apple, my Robinhood, and my SoFi. Because these are bags that I think will also perform well with the rest of the market if given the opportunity to. Look at how, Hood, for example, is up 3% when the market starts to rally. That's that sort of more isolated leverage that I'm looking for outside of just VOO. And so, yeah, because of that and because of this, I am entering into a buyer's mindset. Just like I did some purchasing on SoFi a couple of days ago. I think that was Thursday or Friday? When was that? Let's see. Yeah, it was on the 13th. Just like we did some purchasing on SoFi just a couple days ago, I'll continue to do more of that. If given the opportunity, I will do some purchasing because now I believe, now that we're, the S&P 500 went from bottom to top about 5%, we are now entering into a bit of a better period. And truth be told, again, we could see this get much uglier and much worse. So no, I'm not going all in right here. I'm just starting to get that buying engine oiled up and going and start slowly chugging so that if, this does occur, guess what? I can do some great purchasing and ride this puppy to the top. This is exactly what I've been doing in my portfolio for the last about 380 days or so. And it's the exact reason why the portfolio is honestly not performing super poorly, right? The market's not been in a great place, but it's still up nearly $35,000 in the last year. And again, this is just my own play, not play money. I'm not going to call it that. This is my own active portfolio that I'm working on. This isn't my retirement accounts. I have another couple, maybe $400,000 or $500,000 in retirement accounts or managed accounts as well, not retirement accounts because I max those out, that I'm just leaving alone, right? I'm not even doing anything with. These are just the portfolio. This is just the portfolio that I like to mess around with and do stuff with. And again, it's not performing super poorly. And so because of that, I honestly do think that we're entering into a better period to start looking for accumulation, and I'm going to capitalize on it by doing some buying. So I'll keep you updated as it does play out. Guys, please don't forget, this is a brand new YouTube channel. I appreciate you all. We cracked 100 subscribers over the weekend, so thank you all so much. It's kind of crazy. You know, I wasn't quite sure if anyone was going to watch this channel or want to see the content on it. So for those of you who have subscribed, I really do appreciate it. We had 5 subscribers like 10 days ago, so welcome. If you have enjoyed the content, though, I would really appreciate it if you just like this video. Maybe even drop a comment. It'd be cool to get to know you all. I know we're all kind of new here, so it'd be great to get to know you all. So let me know, yeah, and in the comments below. Smash that like button, subscribe if you are new, and let me know how you feel about this sort of video, kind of breaking into more of my strategy, the technical analysis side of things. Let me know how you feel. So got a lot to talk to you about, so I hope to get to talk to you soon, and I can't wait to see you all in the next one. Peace out, everybody.